Hello, and welcome to Pro Trader Strategies Market Commentary for Monday, May the 1st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. For a Monday, generally speaking, we don't have a whole lot of economic data, but today is one of those Mondays where we've gotten quite a bit here in the United States. We had core PCE price index came in higher than expected came in line with expectations at negative 0.1%, right in line with expectations of negative 0.1%. Then we also got personal spending, came in unchanged, even, was expected to increase by 0.2%. That not that good when we see personal spending pulling back and personal income not increasing at all. Actually only increased by about 2.2%, was expected to be an increase of 0.4%. They also revised last month's down, so that's where we get that really you're not seeing any increase at all when you have that revision down, and we showing an increase now. They're offsetting. It makes it like personal income didn't increase at all. Then we also had manufacturing PMI come in line with expectations at 55.9. We have final manufacturing PMI come in at 52.8. Those two aren't widely looked at because we have the ISM manufacturing PMI, which is the number everybody looks at. ISM, Institute for Supply Management, Purchasing Managers Index, which is a ISM PMI manufacturing number, came in at 54.8, expected to be 56.6. So a pullback there. And construction spending was supposed to be an increase of 0.5%, came in at a pullback, a negative 0.2%. So all in all, these economic data points from the manufacturing side to the personal consumer side, not looking that good, a lot lower than expected. We also got the ISM manufacturing prices paid come in as an increase. So it was higher than expected at 68.5, was expected to be 66.5. So that's higher on that end. Now, keep in mind, so we're seeing a lot of this manufacturing PMI, Purchasing Managers Index pull back. We're seeing personal spending pull back. Probably a reason why we're seeing the ISM PMI number come in a little bit lower than expected. They're seeing that show up, that the consumer isn't spending or isn't showing a lot of drive to go out there and buy new products, and that personal spending number probably not increasing because personal income isn't increasing. So a lot of these levers and pulleys showing up in today's economic data points. So keep that in mind going forward. Today's kind of a wet blanket in that regard. The broader market isn't reflecting that necessarily, aside from crude oil we have down on the day, and it's starting to break just slightly below that point of control for the time spent. Remember, this popped back up there not too long ago when we traded up. It's pretty close in regards to relationship. We're seeing that move back down. Volume still has quite a ways to go before we see that probably move back down. We're going to have to trade here or slightly lower before that happens. But crude oil down on the day while some of the equities are cruising higher. We've got gold off as well. We're still stuck right here within this value area, where the most time and volume's been spent. Should be pretty comfortable there. Remember, we did get this crossover quite a while ago. If gold continues to slump, we could see that recross over to the downside. So it is still in a bullish trend, quote unquote, but the market has been slipping ever so slightly since we've seen that bullish crossover in the moving averages. And we have the we have the bonds down on a point, just over a point on the day, and right back to the value area high for the bonds. Remember, I talked about it even during this rally. The market's pretty much priced in an interest rate increase going forward. That could be off the table here as we're starting to see some of these economic data points start to slide a little bit. Don't know that the Fed should be raising rates if we start seeing some of these data points slip a little bit due to their increase in interest rates, in a sense. We've got the Dow Jones Industrial Average just slightly up on the day by about almost 17 points, and really been pretty boring on those days that I was gone. So I didn't even do a whole lot during that vacation, so I was able to kind of step aside as the market really wasn't moving a whole lot. I only did one thing while I was on vacation. I'll talk about that here in a minute. But the NASDAQ, not really looking at these economic data points as being that bad, as the NASDAQ leading the way to the upside, up about 44 points right now, and on the highs of the day. We have the E-mini S&Ps. This is what I was talking about. Those days I was gone, really nothing happened, and continues to be a pretty quiet inside day, if you will, with the E-mini S&Ps up almost 7 points right now. This is what I'm talking about, the inside day. If we look at like Thursday and Friday, they were just really trending sideways. Nothing happened for the latter part of the week while I was gone. And today, pretty much a similar situation where it's not really an inside day from yesterday, but definitely, as you can see, just completely trending sideways with the E-mini S&Ps just having a real tight range the last several days. I think the broader market really trying to discern what to do with these economic data points we've been seeing. With AT&T, this is a trade that I had on, if you guys remember. This trade I ended up covering while I was on vacation, and you probably could cover it a little bit better than I did, as you can see the market being down further on the day if you have this trade on. And I had on the May 45 puts that I was long and short the 38 puts to create that spread. Paid $3.45 to get into that trade, got out for about $1.75 profit, got out at $5 and about 25 cents. I think it was actually $5.26. So right there in line with taking 50% of my max profit on that trade. Would have been about $3.50, half of that $1.75. So right in line with my rules for that trade there. But like I said, if you still have that trade on, you can cover it for a little bit better today as the market has slipped down below the value area low. So that market looking to slump even further. So you can look to take that off if you are following along with those rules. But now that it's broken below that value area low, you could easily see it want to come down and test this volume node. So just a heads up on that trade. IBM, if you guys remember with IBM, I'm long this stock because of an earnings trade. When we got this gap down, started selling calls against it to lower my basis on it. With that, I have rolled my May 165 calls out to the June 165 calls and collected another 58 cents for that. So with those May calls, I originally collected about, I think it was about 36 cents for those, rolled those out to the May and collected now another 58 cents. So continuing to lower my basis on those IBM stock that I am long at 165. So if I can get it to come back up, that's where I'm looking to get out. So we're going to have to keep our eyes on that. It's starting to get a little weaker here, and wanted to roll that out before it got too much further away, so I could get a nice little credit for those 165 calls. And looks like it's working out in a sense. Much rather have it come up and run right through my 65 short calls to basically synthetically get me out of that in a sense. So that's all I've done for today. And while I was gone, I was out in Philadelphia for the draft, missed a couple of days of daily market commentary. But go to protraderstrategies.com and sign up for this webinar we're going to be doing on how to defend earnings strategies when they go against us, similar to what we're doing here with the IBM and a couple of the other trades. Whenever they go against us, I'll show you how to manage that risk, increase your probability of profit going forward, and how to stay mechanical. All right, so go to ProTraderStrategies.com, sign up for that. If you can't take that, take it easy.